Well, thanks everybody for logging into the SPIA webinar. Today, Berber Kramer from IFPRI, who's going to tell us about some of her work on picture-based insurance, and we'll go for about an hour, and then break it off for a question and answer period. For questions that you have during the presentation, feel free to use the raise hand feature, or go ahead and come off mute or type it in the chat. So go ahead and share your screen and take it away, Berber.
All right, thank you. There we go. And yeah, in case of any questions in the chat, Kyle, will you let me know, because I won't be able to monitor that one.
Yep.
All right.
I will.
Good. Thank you so much. Good. So yeah, I'll be talking today about an intervention that gives insurers eyes on the ground. This is, as Kyle mentioned, picture-based insurance. And I'll be presenting. I have quite a bit of work to present here. 2 impact evaluations of picture-based insurance. Mostly the lessons learned from those impact evaluations in terms of the implementation and the design. I'll be talking a bit less about results, because the impact evaluations are still ongoing. We haven't done end-line surveys yet. But then also talk about some exciting next steps, including an evaluation following this work that is funded by SPIA. So as background, there's a lot of interest in agriculture insurance, and especially index insurance, to improve smallholder farmers' resilience. But there's challenges in the provision of these agriculture insurance solutions. So on the one hand, we have indemnity-based insurance, which pays out for actual losses that might be incurred to the crops. The disadvantage of indemnity-based insurance is that you can imagine, to verify those actual losses, there's really high costs in terms of having to send out somebody to a farm to verify, has this damage occurred? And on top of that, there is asymmetric information, by which we mean that there is information that the farmer has that the insurer does not have. And the insurer, for instance, cannot monitor how much effort a farmer is putting him or herself into minimizing risk, and whether maybe a farmer is not adopting unnecessarily risky practices. And insurance actually inducing farmers to adopt those risky practices is what is considered moral hazard. In addition, there is adverse selection, with insurers being unable to observe the risk profile that a farmer has. And so you might get into a situation whereby primarily farmers with the highest exposure to risks are enrolling in insurance, which you could imagine is increasing the costs of providing insurance, because it is increasing expected payouts from the insurer perspective. And so those are the traditional challenges to these indemnity-based insurance products that we typically think of when we have our housing insurance or our car insurance. Those are all actually indemnity-based. So because of these challenges in supplying these products, we see that very few smallholder farmers actually have access to these indemnity-based insurance products. And with that, a solution came in the form of index-based insurance. Index-based insurance pays off on the basis of, for instance, weather data that is proxying for potential agricultural losses, measured, for instance, from a weather station or from a satellite, from satellite data. You can also have index-based insurance based on vegetation indices that are tracked through satellite data again. And finally, there's area yield index-based insurance, whereby crop cuts are being done in a representative or in fields that are representative of a larger area in order to estimate yields in that area. And an area can be anything between a geographical zone at a larger scale, which is used in African countries, for instance, Kenya and Zambia, versus at the granular level of a village, which is the case in the India insurance scheme. These area yield index-based insurance products they are still considered index-based, even though they are actually measuring yields, because you construct an index from multiple yield measurements that are sampled for a larger number of farms. And so the idea is that compared to going to every individual farmer in this way, by taking just a sample of a few farms to measure yields and see what is the situation in this area, that you can reduce the cost of providing insurance. Now, there's a few problems with these index-based products. And the prime one that we often talk about is basis risk, in the sense that insurance payouts and the index that is intending to proxy for losses is often not adequately correlated with the actual losses. So in the case of the area yield index-based insurance products, for instance, you could imagine that there's a lot of variation within a geographical zone in yields, or within a village, there might still be a lot of variation in yields. When we're talking about weather data, it's very difficult to predict the exact correlation or the exact relationship between rainfall and the yields that a farmer might obtain in a given season, because there's a lot of other factors that go into predicting yields. So basis risk is a commonly mentioned problem with index-based insurance. Now, also related to that is these products can be quite difficult to understand. They are highly automated, which is good in the sense of making payouts automatic and very rapidly. But that comes with the problem that there's limited farmer engagement, and that for farmers it remains a very abstract concept. And finally, even with these index-based insurance products, there's often still very high costs involved in more on the administrative side. So although this was for a while kind of seen as a magic bullet in terms of de-risking agriculture, over time we have come to really realize that there's still a lot of challenges with these products. So then a few years ago, as we were working on this area, and IFPRI had done quite a few programs around working with governments to try and help them improve their insurance programs, also projects in which we evaluated the impacts of insurance. Through that research, we got a little bit disappointed with index-based insurance and started looking at a different solution, and started wondering, okay, can we actually turn images into numbers? And that's how the idea of picture-based insurance started coming up. We were thinking, okay, if we can use images, smartphones that a lot of farmers start acquiring nowadays, can we actually just like when you have car insurance and you can send in images to your insurer of the damage, can we actually get something similar in the world of agriculture insurance? So we set out to test this. And the idea was that we could take advantage of this increasing smartphone ownership in rural areas. We also felt it was easy to understand with high farmer engagement. And the assumption was that these images could help reduce basis risk, because now you're not assessing damages on the basis of a proxy, as the case in index insurance, but really on the basis of visible damage in a smartphone picture. And finally, the idea was that with the images, there's also potential to increase the amount of information to an insurer, and thereby help overcome those asymmetric information problems. For instance, moral hazard could potentially be avoided by allowing the insurer to carefully track management practices across the season by requiring a farmer to send in images. So that is the motivation behind this work. Now, how does it work in practice? So the idea is that farmers or a representative can download a smartphone application, and then within that application, they enroll a site by taking an initial picture. And then every day from sowing to harvest, they upload new pictures for those same sites using the same view frame. And as you just saw in the illustration, the animation in the slide, is that there's a ghost image in the smartphone app that is helping them make sure that they always take images of the same location. And then on the basis of the stream of images, an assessment is made. And on the basis of that, finally, a payment can be made to the farmer. So it's really kind of going back towards indemnity-based insurance, but without having the field visits and having a track record of everything that has happened in that field up to the point that damage occurs, or up to the end of the season. So that is how it works. Now, in 2016, 2017, we did a formative evaluation of this insurance approach to see, does this work at all? Because it was a new idea, and it needed to be tested, of course. So we had 750 wheat producers from 50 villages in India, in Haryana and Punjab, 2 states in the Northwest, where there was already quite a bit of smartphone ownership. So it was a good location for us to kind of first test this. These 750 wheat producers and 50 villages were randomly assigned to either receive weather index-based insurance in return for sending in images of their fields, or weather index-based insurance and picture-based insurance. So we have here as a control farmers who are receiving weather index-based insurance as kind of the status quo, versus those who are receiving picture-based insurance as an add-on, and thereby having more complete cover.
Can I just ask a clarifying question before on that? Just, I wonder what types of variation in yield are detectable by pictures. I'm thinking of, like, if say the grains don't fill correctly or properly, and so the grain weight is not sufficient, that might be harder to pick up with a picture versus, if the crop is lodged or it's been, drought affected or something along those lines.
Yeah. No, so what we found is, and that's the second point here, we found that the picture-based monitoring, the images sent in by the farmers, if we compared them with crop cutting experiments, they helped reduce basis risk. So we were able, from the images, to say, okay, which farmers really have a significant reduction in yields compared to what yields should be. But also we found that this was particularly the case for more severe damage. So farmers who might have had moderate damage based on their yield deviations, for them, we were not able with the pictures to predict losses as accurately, but really for severe damage. And these severe damage events were mainly caused by hailstorms and by lodging, so the example that you mentioned, that is highly visible in the images. In the season that we did a formative evaluation, there was no case of extreme heat. Extreme heat at the end of the winter season in this part of India, it can affect grain formation. And that is something that also with agricultural experts, we agreed is not something that you can capture through the images. So for that, you'll still need other solutions to kind of insure farmers from those types of risks. But then you could also imagine that something like temperature is much more homogeneous across an area of the same altitude. And for instance, the plains in India, temperature is pretty constant, irrespective of where you go. And so weather index-based insurance can actually complement this in that case by saying, okay, weather index-based insurance to shield farmers from the consequences of extreme heat, versus this image-based insurance to cover events such as hailstorms and lodging events that seriously damage the crops. So you could see it as a hybrid solution. So it was a good question, thank you. That's important to clarify. Now, we also found in the formative research that there was considerable farmer engagement, and that, despite not everybody having that much smartphone experience, we did see that people were able to use the app, and also that on a more or less voluntary basis, 2/3 of farmers actually did decide to participate in this and send in a picture once a month. Also, what farmers reported is that they actually liked sending in the images because it allowed them to, or it encouraged them to visit their plot more often and look at their crops in more detail, more carefully. And so with that, we actually started thinking of using the images also for advisories, because farmers were clearly linking this to, hey, I want to improve my management practices and I can better observe what is happening in my fields. So those were two findings from the formative research. We also found, that's the third point here, that the approach improves demand for insurance. We found a higher willingness to pay for picture-based insurance compared to weather index-based insurance. And also farmers were willing to pay quite a bit extra if PBI was provided as an add-on to weather index-based insurance. Now, the problem is that in general, willingness to pay for insurance is fairly low, and people kind of benchmark around 1.5% or 2.5% of the sum insured. And coincidentally, that is actually the premium that farmers are paying for the National Crop Insurance Scheme. So it seems like there's a lot of clustering of observations around 1.5 to 2.5%, which makes us think that the scheme, the National Crop Insurance Scheme, has sort of created an anchor for farmers of this is what an insurance premium should be, and they won't be willing to go much more above that for other insurance products. So with that, willingness to pay does remain below actuarially fair premiums, and to create demand, subsidies would remain necessary. And then finally, we did not find evidence of tempering or moral hazard. That was a concern that many people had when we started this work. But we find that between our control, where just weather index-based insurance was provided, versus weather index-based insurance with the PBI add-on, we found similar input use. Also, when input use, of course, is self-reported. So question is, maybe there's some social desirable reporting, but also objectively measured yields did not vary across the two treatments. So farmers with picture-based insurance did not have lower yields than farmers with only weather index-based insurance. And also from the pictures, we did not find any evidence of moral hazard. The pictures didn't for PBI farmers, we did not more often, for instance, see damage in the pictures. And also there was no tempering, maybe also because of the design of the app. Farmers send in the images through the app, they take the pictures inside the app, so they cannot kind of start playing with the images if they wanted to. So those are a few findings that then led us to start impact evaluations in both India, in Haryana, and in Kenya. And I'll be talking about those evaluations in a bit. So first, a little bit about what do we think, what type of impacts could we expect? So the idea is that with picture-based insurance, we hope to reduce the cost of loss verification and the speed at which losses are being ascertained, so that farmers can receive their insurance payouts faster compared to indemnity-based insurance. Also, with the monitoring throughout the season by sending in images throughout, we are hoping that this design limits moral hazard. So that's another assumption in our theory of change. Those two combined would improve the supply of these types of insurance products. Now also, and this is more on the demand side, we expect that this solution helps reduce basis risk in index insurance, thereby improves demand, and also improving demand not necessarily through the project design or to the product design and the accuracy of payouts, but also by improving the tangibility. That farmers might see, oh yeah, this is it just works like my car insurance, so it makes sense, and that is encouraging them to take up these products. So what could that result into in terms of our outcomes? Improving take-up of crop insurance, and that resulting into both impacts exposed in terms of farmers receiving timely payouts when they have production shocks, but even ex ante, in the absence of any shocks, that there is a sense of reduced exposure to risks. And those two channels, exposed and ex-ante, can have both their own separate effects. So exposed, by having timely payouts in case of production shocks, we expect improved coping, and that resulting in improved human capital if improved coping reduces stress within households, and also if it protects investments in human capital. For instance, if there's a health shock, that people will still be able to go and seek healthcare, that children are not being taken out of school, that a household can keep investing in education. And so ultimately, we hope to see improvements in human capital there. On the ex-ante channel, so this is even in the absence of any shock and even in the absence of any insurance payout, as long as farmers trust that insurance payouts will come when, in case they would have a shock. In terms of that ex-ante channel, we would expect increased investments in agriculture because farmers dare to take more risks now that their risk is reduced. But also that it is easier for them to access credit, and that on its own can improve investments. So, and that could result in higher incomes. And then from sort of a human capital point of view, we would see improved dietary diversity, which as improved nutrition and health might again improve in the long run human capital at the household level. So that was our sort of broader theory of change as we started this out. And the impact evaluations were designed to test this theory of change. And so these are also longer run impact evaluations through which we were really hoping to look at some of these channels. So let me turn to the design of the impact evaluations, and I'll start with work in India. This is joined with Francisco Ceballos, Samyukta Kannan, and Pushkar Gaur, who are with IFPRI. And then we are working with the Borlaug Institute for South Asia, which is based in Punjab in India, and with an insurance company. And they are actually underwriting this insurance product. So picture-based insurance is now a real insurance product that an insurance company is offering. And this insurance company is called HDFC. So the evaluation is implemented in Haryana state, one of the states where we actually started also with the formative evaluation. And in this evaluation, we included 100 villages and randomly assigned them into two treatment arms. A control arm, so 50 villages are in our control arm, and there we provided training on crop insurance, training on using the smartphone app to send in images for crop monitoring. And then we provided a cash incentive as a reward for sending in images. The reason why we did this is because we really wanted to focus on what is the effect of risk reduction through insurance, but not confound any estimates or differences between treatment and control by maybe training farmers on crop insurance might be having an effect. Maybe sending in the photos might be changing farmer practices. We really wanted to focus on what is the effect of providing insurance. And because of low willingness to pay, we decided to subsidize insurance. But if we're providing subsidies in a treatment group, we were providing free insurance, then in a way that is an income transfer. And so we did not want to measure the impact of that income transfer, but rather really the risk reducing effect of insurance. And that is why we provided a cash incentive valued at a similar amount as the actuarially fair insurance premium as a reward for farmers sending in images in the control. And so you could see this also as sort of a conditional cash transfer, sort of as a social protection plan, and that we offer in the control group. And then the question is, in our treatment where we were providing free insurance, do we see differences compared to the control? Because in the treatment, we're really looking at farmers knowing I will receive a large payout when there is a shock, and really being, having that risk protection. So that is the main research question that we are answering through this design. And we really deliberately decided not to look at the effect of an income transfer from a subsidy. And that is why we have designed a control in this way. Also, I wanted to point out here that actually we randomized at the village level in order to overcome issues around spillovers, also jealousy effects. And I must say that this is working out quite well in our evaluations. In both Haryana and in Kenya, the implementing partners had no problems with randomization, and mostly because it was randomized at the village level. So I think a lot of hesitation that implementing partners in the beginning might have towards randomization can be overcome by moving towards village level randomization. And from a design perspective, this is also a good thing because you don't have to worry as much about spillovers within close villages. Yeah, so that's on the design. An overview of data collection. We did a baseline survey starting in 2018. And then in 2020, we did a phone survey as midline. And finally, the endline survey is coming up sort of later this year. In addition, we have follow-up surveys after every season. So we're collecting quite a bit of data, and after every season, taking a quick scan of what outcomes did farmers experience this season. But the main data points are baseline, midline, and endline. Also important to mention is that we started out in 72 villages. Our original plan was to work in 72 villages. But we wanted to focus on tomatoes as a potentially high return, high risk crop for which we were hoping to encourage farmers to grow this crop in Haryana. And if you know the context, there's a lot of monocropping. A lot of farmers are growing wheat in the winter season in Rabi, and then in the monsoon season, Kharif, they're growing rice, and there's very little crop diversity. So we were hoping to encourage some crop diversification, hoping that tomato production and other horticulture crops that farmers might be encouraged to start growing that when they have insurance cover. But then at baseline, we realized that it was quite difficult to find a significant mass of tomato farmers, or more generally horticulture farmers, in the villages where we were working. And that's why we did an additional listing in another 29 villages later, 1 year later, so that we could also include, and those additional villages were actually included already in the implementation in 2019. So finding enough farmers, in a way, growing the crops of interest was a key challenge that we faced early on in the project implementation.
So Berber, Karen just asked a quick clarification on whether the insurance is available for all crops or just tomatoes and cereals.
Yeah, so the insurance is available only for tomatoes, wheat, and rice. Yeah, thanks for clarifying that. Then in 2020, as I mentioned, we did a midline phone survey, now including all the 100 villages. We managed to interview 1,690 farmers. And over this phone survey, of course, we had to be selective in what you can ask, because you can only keep a phone survey going on for so long. But we asked about insurance cover, also when farmers were receiving payouts for a given season, and so that we can measure the speed at which payouts are being made by different insurance products. So we were not only focusing on PBI here, but also, for instance, the national government insurance scheme, which some farmers are taking on in this area as well. And then also we have measures of basis risk. In addition, we looked at coping strategies, also dietary quality indicators, for instance, a food consumption score that combines both food quantity or frequency with dietary quality and diversity. Then we look at investments in agriculture, for instance, technology adoption, area cultivated, the amount farmers spend on inputs, labor use, also crop diversification, and then finally crop income. And on the gender side, we're particularly interested in women's dietary diversity, and with insurance being supposed to be kind of relieving some of the stress that farmers might be having around their crops failing and then being unable to repay their loans or invest in a subsequent season. We also measure mental health or stress indicators. We did not do that one at midline though, because it was a phone survey. So here is a bit more on the sampling frame. I'll skip over this mostly. I'll just point out that the baseline survey, as I mentioned, it was difficult finding enough tomato farmers, which we really were hoping to prioritize instead of having the mass of the survey being completed by farmers who just grow wheat and rice, especially with wheat not being a very risky crop. So with that, we only had 649 farmers completing the baseline data in those original 72 villages. And then we decided to go to an extra set of villages and expand it to 100 villages. And so implementation was done in those 100 villages, but we could not do a baseline survey in those 28 additional villages. And with the baseline sample size being small, we really had to find a way to increase our midline sample size in order to be able to identify impacts. So what we did instead is, of course, we included any farmer we could get with baseline data. But in addition, we recruited farmers who had participated in the preceding season in sending in images in return for those cash incentives in the control group versus in return for picture-based insurance in the treatment group. This was needed because if we would just take a representative sample from a village, we were expecting, given take up, not being sufficiently large to get a lot of farmers with PBI in the sample, we were worried that we would have low power. So we cannot 100% guarantee that there's no selection into the sample. And in the treatment, farmers might have selected using the app for other reasons than in the control, because in the treatment, farmers were receiving insurance versus in the control, farmers are receiving cash incentives. So those are some of the challenges that we ran into. We do see on time invariant characteristics that we measure at midline that there's a few imbalances that we need to control for. But this was really the best solution that we could get in this situation because of resource constraints. Once we had selected the sample, we actually see for a phone survey pretty good response rates. So of the total sample, 75% this ended up consenting and being interviewed. So for a phone survey, we're pretty happy about that. The endline survey we'll be doing in person, and so there we're hoping to be able to get that response rate further up. So there's a little bit on sampling. Now also that translates into the empirical strategy. I'll talk about that a little bit, like how we deal with those concerns around the midline sample not being necessarily perfectly representative and some potential selection issues occurring. So in terms of our empirical strategy, initially we were planning to estimate impact separately for each crop, for tomatoes, wheat, and rice, which, as Karen clarified, are the crops that are covered by insurance. So we estimate a simple OLS equation, whereby here we see outcomes as a function of the treatment, a simple dummy, and a vector of control variables, including those time invariant characteristics that are imbalanced in the midline survey. Now, due to concerns about sample size and also selection into crops, although we pre-specified estimating impact separately for each crop, we decided in the main specifications in midline to pool farmers growing different crops. So to have one equation, one model estimated for all crops combined. And then we estimate in that equation heterogeneous treatment effects as an extension, so that we have separate dummies for wheat, rice, and tomato. And those dummies interacted with treatment. Wheat, rice, and tomato are included separately as control variables in our vector of controls. And then coming back to the issue that at midline, we had to expand our sample, not with farmers for whom we do not have baseline data. We estimate everything for 3 samples. Baseline farmers, those we apply weighting to reweight them to represent the baseline sample, because we did not have 100% response rates on the baseline sample at midline. And so the midline sample of baseline farmers are reweighted to make them representative of the baseline survey sample. Then we have the expanded midline sample, and we use those farmers, that sample, in 2 ways. So this includes both the baseline farmers and those additional 1,500 something farmers that we added in order to boost our sample size. So we have one specification with this expanded sample where we reweight them again to the baseline sample, because the baseline sample we know was balanced at baseline, was representative of the target group of interest. And then we also estimate our equations with the expanded midline sample without reweighting, more as a robustness check and seeing, if there's any differences. So these are the key analysis that, or the key 3 analysis groups. Now we find that,
if I could just quickly clarify on that, the indicator variables for the crops, those are time varying, or those are
measured at midline. So it's whether at midline a farmer is growing wheat, rice, or tomato.
Okay.
Yeah. I see some chat action.
Yeah, I think we'll save what's there for now for later.
All right.
I'll let you know if there's anything to go ahead.
Good, thank you. So what we find, and results are fairly consistent across each of these 3 samples, which is giving us some assurance that the expanded sample recruited at the midline survey, that although there's some slight imbalances between treatment control, results with just the baseline survey sample that was balanced, that those findings generalize to the midline sample, but then just because it's a larger sample, we have a bit more statistical power. So what we find at midline in terms of treatment effects, insurance coverage among surveyed farmers is higher in the treatment group than in the control, and quite a bit, 25 percentage points, from a base of around, I believe, 40%. So this is quite a substantial increase in insurance coverage, which we would expect, because in the villages, in the treatment villages, farmers have had access to free insurance cover. They had to go through a few administrative hurdles to get that insurance cover, but we do see people taking up and taking those administrative steps, and then also sending in the images in order to access that free insurance cover, because the insurance cover is not provided when farmers are not sending in images. We also see increases in investments at the intensive margin at midline. So we see increased spending in the treatment group on agricultural inputs, and especially for tomato farmers, we see increased spending on labor. But this is all in terms of intensive margin. We do not see anything at the extensive margin. For instance, types of crops that farmers might be growing, and the total acreage cultivated. We also don't see impacts there. We also do not see impacts on productivity and income. And with that comes, I think, a bit of a cautionary tale, because if farmers are increasing their spending, but we don't see impacts on productivity and we don't see impacts on income. Now, they have increased their investments, so they are exposed to more risk. So the product needs to be good in providing accurate cover and timely payouts for them to protect those increased investments. So that's a bit of a cautionary tale that I'll talk about in a bit. Insights on potential impacts in the longer run from the survey, we also see that compared to male farmers, female household members who in this more conservative part of India are very unlikely to actually see themselves as farmers. They rarely go, for instance, to the fields. They mostly restrict kind of their daily chores to the compound. But we decided to interview them, and we were really happy that we did that because they actually report a higher frequency of shocks happening, weather shocks, damaging crops. They are more likely to report crop damage than male farmers, and they also are more likely to report using costly coping strategies. Finally, they're more likely to experience health shocks from crop damage. And then we see that women's dietary diversity scores are inadequate, whereas household level consumption indicators are actually adequate. So had we not interviewed female household members, we would have actually missed some areas where insurance can benefit household members, but not necessarily the farmer that is taking up the insurance product, but other members of that household. So it's important to not only look at impacts for a farmer, but also in a household, but also look at other household members. So I think that's important to kind of highlight in how we decided to design the survey and how we are also going to, this is going to be important for us in the endline survey, that we need to make sure that, again, we are interviewing both male and female household members, even if in this area, culturally, really, men are seen as farmers and women are actually not. It was a big fight that I had with the enumerators to survey women, because the enumerators were saying, no, but they won't know anything about agriculture. And I was like, just try it. We pilot it. We see what happens. And then they came back saying, oh, they knew a lot more than we thought. And it's important to interview them. So yeah, I think that's something that we're really trying to highlight and stress with this work. So that's on Haryana. Now let me move to Kenya. And I see I have about 15 minutes left. So on this one, the project started later, so I'll also be a bit briefer on it. So the work in Kenya is implemented with Francesco Cecchi from Wageningen University, and then a team from Acre Africa, which is an insurance service provider here in Kenya, and then Benjamin Kivuva from the Kenya Agricultural Livestock Research Organization. So we're working in 7 counties in Kenya. And again, varying whether farmers are offered picture-based insurance or no insurance, but the setup is slightly different. Smartphone ownership and use in rural Kenya is a lot lower than it is in the area where we work in India. And so in this project, we decided to work through what Acre Africa calls its champion farmers. This is a network of farmers that are considered to be more progressive in communities where Acre Africa works. These farmers are often considered to be social influencers, and Acre Africa works with them to distribute insurance and other services. So these champions in the project, they were provided a smartphone and also trained on how to send in images, how to sell insurance, provide insurance education for farmers, and also provide a number of additional services, including seeds. So what the champions then did after that training is they registered farmers in their community, often more than 100, which was perfect for us as a sampling frame. But the champions, because they had to send in images of farmers, they actually were given the option to shortlist 20 farmers from a subset. So what we did is we randomly assigned the farmers that they had registered. We randomly assigned them into potential treatment and potential control. And then from the potential treatment, they shortlisted 20 farmers. And from the potential treatment, they also shortlisted 20 farmers. So that gives us randomly selected, in a way, project farmers versus non-project farmers to allow for within village comparisons, even though champions still had a choice in who they would be working with. Then they, throughout the seasons, have been collecting data using what Acre Africa branded as the See It Grow app, which is very much based on what we were using in India, but with some fine-tunements and adjustments for the Kenya setting. And then the champions also distributed free insurance trials in the first few seasons, and in the first season, trial packs of seeds, so that in the future they could be marketing those products. So this is how that model would work for seed distribution. Champions will take an inventory of seeds, share that with Acre Africa, which then connects them with distributors for those seeds, which then go back to the champion farmers, delivered in champion farmers communities, so that they can provide those to the farmers who have booked the seeds. And this is done at a commission. This is a model that Acre Africa was interested in, which we are testing in a separate program with them. It's available for all the champions throughout our treatment and control. And I'm mentioning it here because we also varied in the project whether farmers, the champion farmers, were selling different types of seeds. So everywhere champions were selling seeds of regular varieties, but then we randomized whether seeds of stress-tolerant varieties can be sold by champions. And this is important from an insurance point of view, and especially when we're talking about picture-based insurance. Stress-tolerant varieties, and in this case, we're really focusing on drought-tolerant varieties. These reduce farmers' exposure to risk. And so that can result, if these varieties are doing what they're supposed to be doing, they will lower risk exposure, lower potential insurance payouts, and thereby could translate into lower insurance premiums. So that was an important component of the design for the Kenya study. So here in the top figure, you see an overview of the experimental design focused on the insurance component. In Kenya, we have 3 treatment arms. First of all, we have a no insurance arm. So this is in a way our control. Although in this arm, champions are still engaging with farmers, selling seeds, sending in photos for crop monitoring of the plots of those farmers that they're working with. So there's still activity. So in a way, it's our control arm, but that's not that there's no activity at all. Then there's a weather index-based insurance arm and a picture-based insurance treatment arm. And then within every treatment, which was randomized at the champion level, again, to overcome challenges with potentially spillovers, jealousy, if this is offered and varied within a village. So we randomized this at the champion level, but then within champions, as I mentioned, is we provided champions with a randomly selected list of farmers that they had earlier registered and said, okay, pick 20 of these. So those are in a way then the 20 treated farmers. And we also asked champions from another list to pick 20 farmers for future project activities. And so those are untreated farmers, but from the same community who we know have been selected in a similar mechanism as the 20 treated farmers. So that will allow for within village or within champion comparisons. I'll skip timelines. I'll also skip this, except that just to note, champions are younger farmers. They more often have a smartphone, even before the project started, and they got a smartphone from the project. They were also more often already trained on insurance and ever had insurance. So these are a little bit more financially, maybe all progressive farmers, and they're more like the early adopters in their communities. So that's a bit on the champions. Now, by and large, we find actually no impacts at midline of insurance, either of picture-based insurance or of weather index-based insurance, regardless of whether we look at factors such as insurance knowledge, perceptions of product quality, farming outcomes. And we believe that we haven't really given it a fair chance yet because the implementation, the project started right around the time of COVID. So in the beginning, implementation was really slow. Insurance payouts have been delayed. So at the time of the midline survey, actually farmers who were eligible to receive insurance payouts, they had not yet received any insurance payouts. So then in that setting, it is also a little bit questionable if you can really expect impacts of insurance to already have occurred, especially because we also know that some gaps, some knowledge gaps on part of the champions, and that champions in the two treatment arms, picture-based insurance and weather index-based insurance, that they themselves did not really fully understand the differences between the products that they were themselves offering. So picture-based insurance, champion farmers in the picture-based insurance treatment arm, they were not aware that they had much of a different product from other champions. And so that is something that we've been focusing on in the training, or that Acre Africa has been focusing on the training moving forward to really beef up the implementation and make sure that these differences, that champions are more aware of the terms of the insurance products that they are providing. So that is work in progress. Now, one outcome of interest that I could mention is willingness to pay, which we elicited in an incentivized way with auctions. And there we are finding some interesting results, but they're not significant when we're controlling for gender, county, and crop. We see that actually, you see here in the blue bars, picture-based insurance willingness to pay, and then black bars represent willingness to pay for weather index-based insurance. Both in this context are priced at the same premium. We see higher willingness to pay for picture-based insurance when it is offered as a standalone product. Now, interestingly, once it's bundled with inputs, the willingness to pay for picture-based insurance is slightly lower than for weather index-based insurance. And we think that this could have partly to do with moral hazard, that farmers are saying, oh, if I already have insurance, then I don't have to pay as much for seeds, for better seeds. So that is something that we're currently looking into.
About 7 minutes or so, Berber, if you wanted to.
Yeah. I'll move to challenges sort of as a wrap up, and then say spend a few minutes or 1 minute on the next steps. So a few challenges that we experienced that I think are useful to share with others, involved in designing evaluations. When focusing on crops, smaller crops in India, tomatoes, in Kenya, sorghum, green grams, where in Kenya most farmers are, you can find a lot of maize farmers, but fewer sorghum or green gram farmers, which were the target crops in Kenya, besides maize. Recruiting a sufficiently large number of farmers was a challenge. And especially for an impact evaluation, you want to make sure that there's a large enough sample to have that statistical power. And this was even more difficult during COVID restrictions, which didn't allow us to go into the field, and really having to work through partners who were already in the field. So that is a challenge. But what we found is that the champion farmer model actually worked really well in identifying farmers and being able to go to a larger scale in a decentralized way without us having to travel to the field ourselves or our research partners. Then on the sampling, I've talked about this a little bit already. So yeah, when not being able to do a baseline survey in the full sample, we really had to find this trade-off between representativeness of our follow-up survey data versus having a large enough take-up, having high enough take-up in the sample, so that people had actually been exposed to the intervention, which is important if we want to measure impacts of the intervention. Then there's low willingness to pay for insurance, which always remains a challenge. So in our case, we decided to provide premium subsidies in order to generate sufficient take-up. So yeah, fortunately, we had the resources to provide those subsidies. And despite picture-based insurance increasing willingness to pay, that was necessary. Then delays in claim settlement have been a challenge that, especially in the case of Kenya, meant that at midterm, it was unlikely for us to find any impacts. And these delays are quite interesting. It's actually more complicated to insure farmers than you think. And there's a lot of know your customer details that even if you provide free insurance, a lot of that still needs to be provided. And then in the case of Kenya, there's the challenge that farmers might be changing phone numbers, and payouts are made through mobile money. So the moment that they change their phone number, their mobile money number also has changed, and it becomes difficult tracking them down and getting them their insurance payout. So that is something that was actually the main cause for the delay in the Kenya case. So yeah, that's delays. And then a final challenge is, and that's kind of translating to what's next, we also realized that insurance alone may not be enough. So in India, we find increased investments, but then no gains in productivity, which could suggest that maybe those investments were not made in an optimal way. Also in Kenya, we find that providing farmers with trial packs of new drought-tolerant varieties really significantly increased take-up, suggesting that knowledge here might be a key barrier. And so that's something then related to next steps. So we're starting a new SPIA-funded impact evaluation that is in the context of communities where picture-based insurance is offered by our implementing partners. We're looking at what is now the impact of providing also advisories on the basis of images. These picture-based advisories in past work, we found that they're seen as very valuable by farmers. They're low cost and they're very interactive because farmers send in an image, and on the basis of that, they receive advice. So this allows for a lot of personalization and tailoring, and making sure that advisories are timely. We don't have to assume which crop growth stage the fields are currently in. We actually see it from the pictures. Yeah, so sorry, my voice is breaking up here. Maybe Kyle, are there a few questions that you can?
Yeah, well, you can. Yeah, we can do that while you grab some more water here.
Yeah.
Orkan, do you want to ask your question right now on the cash transfers in the control group, if you're still around?
Yeah, sure, I'm here. Can you hear me?
Go ahead. Yes, go ahead.
Yeah.
All right. Well, so I was wondering about the cash transfers that were made to the people, to the farmers in the control group. This actually has something to do with the timing of the cash transfer, because I didn't get if this was already during the implementation or if you're planning to do that after the end line. Because I was thinking that the cash transfer then it could trigger some more investment by the people in the control group, and then at the end it might lead to under evaluation of the true impact of the PBI. What do you think on that?
Yeah,
Thanks.
so we actually, the cash transfers, they are being provided at the same time as farmers in the treatment are receiving their potential insurance payouts. So the timing of the cash inflows is the same. The cash transfers are provided only at the end of the season if a farmer has sent in enough pictures. So in that way, it doesn't influence investments in the season that a farmer is sending in images.
Right.
Now, it might influence subsequent season investments, but in a way, we're providing here an income transfer. So we wanted to, because we're subsidizing PBI, providing that free of charge. Farmers who are receiving insurance payouts, they're not paying anything for that. And so we needed to, in order to say this is an impact of insurance, we wanted to provide an equal sized income transfer in the control, but just making that not insurance and, conditional on having shocks, but a permanent or regular constant cash transfer. But both are conditional on sending in images throughout the season.
Thank you.
I see Karen has raised her hand.
Yeah, I have a follow-up question on this. So I perfectly understand the logic conceptually of doing this. But it seems like whether this works between parentheses depends on the perception of the farmers too, right? So kind of because all you're after is their behavioral reaction to what they believe they're getting. And so
yeah,
do you have information on that, kind of on how they perceive the cash transfers and how they perceive the insurance, and whether they made the kind of, they understood that these were meant to be equivalent and they think about it the same way or not?
Yeah, so we have perceptions. I know that so in the midline survey, we did see that farmers had quite a good understanding of PBI and the conditions under which it was paying out. And likewise, for the cash incentives, the conditions under which they were eligible to receive their cash transfers. So yeah, we do have data on it, and it is consistent with the treatments in terms of that. They did perceive sort of, insurance is something that pays out big when you have a big loss, versus cash transfers are provided kind of on a certain non-state contingent basis.
And if I may have a follow-up question on Kenya, which I may as well ask now since it's very related. So if I understand correctly, they didn't perceive the difference between picture-based and index, but they did understand the insurance part of it in both cases.
Yeah. They understood in a way how insurance works. I mean, at the broader margin, some of the details maybe they didn't fully get. But if we're comparing, perceived product quality and what is used to determine payouts, images versus weather index versus rainfall data, we didn't see farmers in the PBI arm versus the weather index arm giving very different answers. So there was a lot of confusion from the first phase, that was up until the midline. And so with the midline findings, we realized, okay, this is really something that needs to improve. And so Acre Africa is now really hammering down on the insurance education. And by both training the champion farmers much better, but also sending messages directly to farmers for whom they have the phone numbers.
One of the striking statistics you showed is that the experience with insurance is actually quite high in this population. So I guess, I don't know whether that's Acre or otherwise, but that, that may provide you an early test or understand, like a heterogeneity test, even with the midline too.
Yeah, that's a good point. I think it was high, especially among the champion farmers, among farmers that they then have in turn registered into the project. Among them, insurance experience is a lot lower.
Right.
But yeah, from also the first phase of implementation, we'll also have more heterogeneity, I think, to then explore at endline, because we'll have knowledge and understanding at midline So we can look at that saying, you know, do we see differences at end line for farmers who understood more versus less? So I think that's indeed a good thing for us to look into more. Yeah. Now that my voice has sort of returned, let me continue with this.
Yeah, why don't you wrap this part up,
Yeah.
Berber, and then we'll go back to Q&A.
So we were talking about insurance, cash transfers, understanding. Now let's go back to the advisories. So providing insurance with these advisories, with these image-based advisories, can actually be mutually beneficial. On the one hand, you could imagine the advisories become more effective because farmers can now take the risk of trying out new technologies because their investments are protected by insurance. From an insurance perspective, there's an advantage of also bundling it with advisories because it can disincentivize behaviors resulting in adverse selection or moral hazard. So on the adverse selection side, farmers may enroll if insurance is offered as a standalone, really because of the insurance cover and because they expect having a shock. And so you could expect high-risk farmers enrolling in insurance. But when you bundle this with advisories, then there's a second dimension of selection into the product. Farmers will enroll not only to get the financial protection from shocks, but also to obtain agronomic advice. And so you might expect that this could be attracting a different pool of farmers. So that's on the adverse selection side. Moral hazard, we could expect could be reduced because providing advisories on the basis of the pictures, one incentivizes farmers to send in more pictures, but it also increases the salience of being monitored. And with the advisories, you can give directions on how to minimize crop damage. So these three things could combined potentially offset or help overcome moral hazard in an insurance scheme. So really exciting is that we'll now have an opportunity to really test these mechanisms through a cluster randomized trial in Haryana, India, and in Kenya. So leveraging the impact evaluations that we started, and then evaluating the impacts of these advisories on knowledge, technology adoption, and farming outcomes. And here's the design for that study. So we have half of the sample, half of the clusters being randomly assigned to generic advisories. So these are very standard advisories that are sent out en masse, not really any tailoring to the situation, personal situation that a farmer might be in. So no tailoring towards crop growth stage, just on the basis of a crop calendar saying this is when advice about irrigation should go out. Now farmers need to get advice about fertilizer. Now we're going to say something about best harvesting practices. So that's the generic advisories. And then on the other side, as the treatment, we have picture-based advisories. So that is the basic design through which we'll look at what are the impacts of these more personalized picture-based advisories on our key outcome variables. But then we go a step further and are saying, hey, but there's these complementarities between insurance and advisories. And so within clusters, we're randomizing whether farmers are being encouraged to enroll through a high premium discount versus a low premium discount. And we have this very so I thought maybe I can just address some of the questions that have been posted in the chat.
Yeah, let's do that then. I'll talk, I guess, about the question I had, which was about the champion farm in the Kenya RCT. I guess I was really interested in understanding more about their incentives, and I guess one theory is that the champion farmers, are say providing insurance themselves, maybe informally to the other farmers, and then they treat this product as kind of a threat to their business. Another is that maybe they're providing credit to the farmers, and then this insurance product is in some ways a complement to what they do. Who knows if either of those are relevant in this context, but nonetheless, I think it'd be useful to sort of really understand more about their incentives and like what their sort of objective function is.
Yeah. So yeah, no, that's a really interesting point. That is something that we can look a little bit more into using our midline data. Because we did ask, where farmers are getting their credit, and if they're using social risk sharing as a coping strategy. So that's definitely something that we can look into. That's an interesting one. Just in terms of how now the incentives are structured is champion farmers are on retainer. So they receive a fixed fee every month for sending in the images based on them meeting their targets. And then in addition, if they're selling insurance policies, for that they receive a commission. Same for if they're selling seeds, they're receiving a commission. So yeah, they have an incentive to provide the insurance products. But I think it's really interesting to look more into what role do they currently play in the social networks. So thanks for bringing that up.
Great, sure. Thanks for your answer there. Did anybody else want to follow up with additional questions before I ask another? I don't want to dominate here, so please, for those who really stuck it out. Okay, that's a signal for me to ask one more, I guess.
All right.
Which was on the moral hazard. I guess one thing that I was thinking of is that maybe an insurance product like this kind of has competing effects that might offset each other. In one way, it may sort of reintroduce some moral hazard issues that weren't there with index-based insurance, which might disincentivize investment. But in the other way, it may protect farmers from additional risk that wasn't there with that weren't protected against with other types of insurance, which could increase investment. So if you see no effects on income in no effects on input use in certain experiments, could it be that it's just you've got these sort of, some farmers are moving in one direction and other farmers are moving in the other direction, and you just kind of got the average offsetting each other?
Yeah, that is a possibility indeed. So I think that is something that we can explore more with heterogeneity analysis. And in the Kenya case, we are now also including more survey questions to get a sense of, do farmers actually see insurance as something that helps you to kind of relax and use fewer inputs because you have coverage from insurance, versus farmers who might say, no, I invest more because of insurance. So we have some survey questions, and we're hoping to, we collected a first measure at midline, and we have more questions included in the end line so that we can look more into that. But I think your point is interesting. And then the other way through which we hope to measure moral hazard in the upcoming trial is by looking at what is the effect of providing farmers with a no claims cashback. So that's when my slides started disappearing, and I myself too. But that was the point that I still wanted to mention. So these no claims, cashbacks, or you could see it in a way as an incentive for farmers to minimize the chances that they're getting an insurance payout, because that will allow them to get the cash back at the end of the season. So that is something that is another way of looking into this issue.
Okay.
Yeah.
Any last questions for Berber?
But I have this is somewhat of an odd question, but let me ask it because it has come up elsewhere. Have you or the team written up a kind of a lessons learned of the series of picture-based insurance studies you've been doing? And is that something you're thinking about?
Not yet, but it is something that we're thinking of. And yeah, your suggestions on, what to focus on would be welcome. We were thinking of kind of doing a guide for people, because we're receiving a lot of questions from organizations who are saying, hey, we want to try this approach in our country, and do you want to work with us? But obviously we don't have the capacity as researchers to work with everyone. So we were thinking of writing a paper that is kind of providing, best practices in implementing this approach, and really from the operational side. Then in parallel to that, we have more the research focused outputs. So yeah, that's what we're thinking of at the moment. So yeah, that's on our agenda. I don't know if this is indeed what you mean, like an operational guide, or what we have learned in terms of the implementation, or if you were.
Yeah, I was thinking more on I guess on the analytical /
Okay.
design part of things. So it was a bit
Okay.
of a question, but I think the reason I'm asking is because this is something that, we've asked, the next seminar, let me put in a pitch for the few people that are still there, is some of the longer term work on ILB, so it's also insurance, the livestock insurance, with that Chris Barrett and ILRI and everybody around that team has been doing. And so it's another case where, the kind of a long-term investment in trying to really look at the different pieces of this puzzle, and looking at the individual pieces, you only get part of the bigger learning that is going on.
Yeah.
So it seems to me there is room for some of that more review type of work by the people that have been doing it. But as I said, it's a bit of an odd question.
No, I think that's a really good question. And it's good to know that you're, saying, oh, there might be room for this. Then we can start looking into, maybe we can put the different trials in different settings together, and focus, not like one piece could be focused on more the operation side, which is more focused or targeted towards implementers, but also having something that is more analytical on the design of these studies and the insurance products. So that's something that we can definitely look into.
Great. I think then we'll go ahead and wrap it up. So
yes,
thanks so much, Berber. We appreciate you taking the time today.
No, thank you for the invite to present our work, and apologies for the mishap with the connectivity. I really don't understand what happened there.
Again, it's a shock that's out of your control.
Exactly, a lot of shocks these past weeks,
indeed.
out of my control.
All right. Thanks everybody.